Scalping boom and crash is by far the easiest thing to do. It is easier than catching spike. You like to know how to scalp boom and crash easily without being knocked out by spike? Grab a seat and come closer. I'm about to show you the hidden strategies that will blow your mind. This strategy is effective and is purely based on price action and just your chart analysis. No indicators needed. Now let's dive right into this strategy. Now on this strategy, we are going to be identifying two things. That's one, the first thing is identifying the key areas, okay, that market respect, that is your support and your resistance. And then we are also going to identify the current trend, okay. Now this is crash. Now this is crash. You can use this strategy for any of the crash or any of the boom, okay. In order to use this strategy to scalp in crash, in crash you have to scalp. It means you have to go for these little candles, right? You have to go for these little candles and not these big spikes, right? So to scalp, we need to collect these little candlesticks. Now this strategy is going to help you to scalp 5 candlesticks at intervals, at very frequent intervals. And if you use this strategy correctly, you're going to make a lot of profit before the end of the day. Okay, now for us to scalp in crash, we have to identify that price is currently what, on a bullish trend. Okay, price should be heading upward. Now for us to see that right here on the 1 minute time frame, we cannot really identify the direction of price right now, so we have to head over to higher time frames, like probably 1 hour or 30 minutes. Okay, now look at this. Now this is the 30 minutes time frame. Can you see that? Looking at this place now, you see that price has reached a support zone initially and it has changed its direction to becoming what, bullish. This is what I mean. So you can see that price hit what, a support zone right here. Okay, so when price hit that support zone, it has changed from being bearish. It was initially bearish, now it has changed toward being bullish, and soon we are going to have what, a change of character right here. Can you see that? So we're going to, price is going to take out that high and it's going to continue trending upward. So when you notice that price hit a support zone on crash, okay, and it has started trending upward, we'll now head over to your 1 minute time frame and try to scalp the little candles. Let me show you the secret entry point that you are to get into the market in order not to be knocked out by spike. It's a very safe position to enter. Now let's head over to the 1 minute time frame. So we are currently on the 1 minute time frame. Now before I show you the secret point that you are going to enter this trade, I want to explain something to you. Now you know what is called rally based rally, right? Rally based rally. That means price trends up, okay, it gets a little retracement and then it trends up again. So this movement right here is what we call rally based rally. So this is the rally, the time at which it's trending up like this is what rally is called, rally. Then at the time at which it retraces, it's called the base. And then the time at which it's continue trending upward again is called rally. So that is why we call it rally, okay, base and then rally. Can you see that? So now this concept right here is what we are going to be using today. So we are going to be waiting for when price on the 1 minute time frame trends up, okay, price is going to trend up and then it retraces and then trends up again, and this time around when it's trending up, it should cause what, a break of structure right here. Okay, it should cause a major break of structure right there. It should be very obvious that there's been a break of structure. Okay, if you don't know what a break of structure is, I have a video on the channel on that explains in detail what a break of structure and a change of character is. So when you have noticed a break of structure, that is when you have to look out for the next I'm going to tell you. Let's look at an example of what I mean by rally-based rally on crash. Okay, so let's look at this place right here. Okay, okay, I think this is the support we drew on the higher time frame. Can you see that? The support zone we marked out. Can you see that? So we marked out the support zone, and it's also showing on the 1 minute time frame. So we know that we have hit support zone and we are going upward. Now, when you get to your 1 minute time frame, you will look at for something like this. Okay, price what trends up, okay, retraces, and then trends up again. Okay, you see this second direction, second time is going up, it should what take out this high, you should take out that high. So that is what I mean by rally based rally. Now, as soon as you see that price took out this high, there is a break of structure right here. You allow price to what continue trending up, and price will trend up and is going to have another spike. Okay, and it's going to have another crash downward like this. Okay, can you see that? So it's going to have another crash downward like this, and the crash, the size of that candle that crashed down, it should not be bigger than 1 to 3 candles. I don't know if you understand. So it should not be bigger than 1 to 3 candles. Let me show you what I mean by that. It should not be bigger than 1 to what 3 candles. It should be something that covers 1 to 3 candles. Now let's look at this one right here that crashed down. When I look at the length, okay, when I look at the length of that candle right there, I can see that is about the length of 3 of these small candles. Okay, if you look at 3 of these small green candles and compare it to the length of this red candle, you can see that is about three candles. It covers 3 candles. Okay, so it should be a very small spike that is within the range of 1 to 3 candle body size. You understand? So when immediately you see that small crash, that small candle that crashed down, you wait for what the next candle to start, which is this candle right here. Okay, so that candle should be a bullish candle, should be a green candle, not a red candle. So when you notice that the first candle that came out is green, what you have to do is hop into the trade right there. Okay, when this can immediately this first candle closes after the crash, you hop into the trade and you're going to take what 5 candlesticks. Okay, stay on the trade for like 5 what candlesticks and you are out. This is the strategy we are using today and it's very, very effective. I'm going to show you, I'm going to go through the chart. I'm going to show you that each time after a break of structure, okay, after a break of structure to the upside, each time there is a little crash of a small body candlestick that is within the range of 1 to 3 candle, you can take 5 candles, you can scalp 5 of these green candles without being knocked out by spike. Now, if you look at this place, you can see that you can even scalp more, but the safest one is 5 candles. Okay, safest one is 5 candles. Take your 5 candles and get out. Wait for it again. It's going to continue because we're an uptrend. It's going to continue. It's going to occur over and over. Okay, let me scroll and show you that again. Okay, look at this right here. Okay, let me delete the support marking so it will be bright. Okay, now look at this right here. Okay, can you see that the price started going upward? Okay, now what happened was there was a spike. Can you see that spike? That spike was a short candle, and the next candle that followed was what? A small green bullish candle. So I can enter right here and then I'm going to take what cap up to what 5 candlesticks right here without being knocked before the next spike is going to occur. Can you see that? So each time there is a break of structure to the upside, okay, on crash, and there is after the break of structure there is a crash, a little crash down with small body candlestick, you can scalp up to 5 candlesticks. Don't be greedy, just take 5 and leave the rest, let them continue. Okay, let them continue. Don't say, oh, I would have stayed longer. Yeah, you could have stayed longer, but you can also be knocked out. So just take 5. If you have a big capital, you can increase your lot size. Just take that 5 candles and you are out. Okay, that is money, guys. That's money. 5 candles, that's 5 minutes with a big lot size. Even with a small lot size, that is money. Okay, now let's check that again. Let's look at the chart. Okay, now look at this position again. Can you see that? Look at this position again. Okay, so look at it again. Now measure the size of this thing. Is about the length of 3 candlesticks. Now measure the size of this one. Is about the length of 2 candlesticks. So after this break of structure right here, and then I see a crash down, okay, a small crash down like this. After the first green candle, I enter and I take what, 5 candles, and I'm out. And then I wait for it to also what, break this high. You can see it broke this high again, and then it crashed down again. Can you see that? Crashed down again, small body candlestick, small crash, and then I enter again right here, and then I take what, 5 more candles before the main large spike can come. Let me show you that it also works in boom. Okay, now let's head over to boom. Okay, oh wow, right here we are in boom. Can you see that? Now let me show you things that you should avoid. This is not every small candle crash. It's not every small candle spike that you see that you are going to hop into a trade. Remember, it is the one that spikes or crashes after a break of structure. Let's look at this example on boom right here. Now look at a small candle crash. Can you see that? There's a small candle crash, but why can't we take that trade right there? Even if I can see that it later went all the way down, but it's not really safe. You can decide to still continue spiking up. Okay, you can decide to continue spiking up. Okay, so the reason we cannot take a trade right there is because the spike happened when there was no break of structure. When you check now, you can see that it happened at this level right here, but this was when the structure was broken. Can you see that? That was when structure was broken. So I will only take the one that happened when structure has been broken, like this one right here that we have. Can you see this one right here? Can you see this one right here? So if I'm to enter this trade on this current trend, I would enter immediately after this one. Okay, this little spike right here, that's when I'll enter, and I'll take what, 5 candles, and I'm out. Okay, so it works perfectly well. What you have to do is head over to your higher time frame. Let me check the higher time frame for boom. Let's check 30 minutes. Okay, can you see? Can you see the 30 minutes time frame? Can you see that it was initially bullish, right? It has been spiking, 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 spiking. Now it has reached what? A resistance zone, and it's currently what? Trending downward. So this time it is trending downward is the perfect time I am to use this strategy to scalp on boom. Yeah, that was the perfect time when price has changed direction on the higher time frame and is now heading downwards. Is the perfect time to scalp on boom. So that is why you will have many opportunities, okay, because it's heading downwards. So these little candles are going to happen over and over again, and you can scalp it like every 5 minutes, every 10 minutes, and you're going to make massive profit at the end of the day. Okay, let's go back and check if it is something that frequently occurs and if it is actually accurate each time it's occurred. Okay, let's look at this right here. Okay, this is another scenario. Can you see that? Okay, there was a break of structure to the downside right here, and what happened next was a little tiny spike that is as long as 2 to 3 body candlesticks. Okay, and then what you have to do is hop into the trade after the first red candle right here, and you are going to take 5 candlesticks without spike. Guys, you're going to take 5 candlesticks without spike. So this is how to use the strategy. It is easy, and it is one secret that I use to scalp the boom and crash markets daily, guys. You know, I love scalping. I love scalping. Yeah, I prefer to scalp than to wait for spike. Okay, so this is how to use strategies. So I want you to go over to your chart now. Okay, scroll through your chart and check each time these little candles occurred, each time they occurred either in crash or in boom, if you could at least safely scalp 5 candles without spike. Now, I want to try it and tell me how it went. Drop a comment in the comment section. Okay, now if you got value from this video, don't forget to like, subscribe to Ever Profitable Income, and share this video to a friend that needs good strategies to trade. Thank you for watching. Bye.